Hello my friends, this video is actually very interesting and very close to my heart because this is one topic which I struggled when I started my trading career initially. I started my trader as a commodity trader. I used to trade gasoline, heating oil, WTI crude, Brent crude, and I was actually a day trader. And I sometimes took positional trade also. So you can understand I took two different kind of trades. Now one finder watching my screen and actually the trend looked like there is a short-term up momentum in the market. So ideally I should be buying it. Actually it goes without saying that I should be buying it. But when I looked at the overall trend in the market, I took a hourly chart, 4 minutes chart, it looked like that the momentum is towards downside. So there are actually two contradicting kind of charts which I saw. One small time frame chart showed that the market is going up, and the bigger time frame chart showed that the market is going down. Now what kind of trade should I be taking? Should I be taking a trade or not? And if I have to take a trade, which kind of chart frame should I follow? And this is a dilemma which I'm sure all of you traders must be facing, that the short-term chart shows different kind of momentum, the long-term chart shows different kind of momentum. So what kind of trade should I actually trade in the market and make gains out of it? So we'll try to understand a three-step process by which we understand that how does one identify trend in the market. The first and the most important point is use the chart depending on the kind of trades which you are looking for. If you are looking for a short-term trade, then use small time frame chart, and if you are looking for long-term trade, look for longer time frame chart. Now I'll try to break it in a more simple way. If supposedly you are looking for scalp in the market, then don't worry about long-term momentum in the market. Look at your short-term chart and take your trades accordingly, because by the time the long-term momentum kicks in, you would have taken multiple entries or exits from the market. So depending on the kind of trade you're looking at, choose your chart accordingly. Now again, if you're looking for a long-term trade holding for a period of time, don't worry about short-term charts. Look only for longer time frame charts which suits your style and take your trades accordingly. So select your charts depending on the kind of trades you're looking to take. The second and the point which is most often ignored, have an equal number of candles for each and every kind of chart. Now if you are supposedly a trader who takes about 100 candles on the chart, I personally do that. I have about 100 candles at one time on the chart. Then don't keep changing it. Don't take 20 candles for one chart, 50 for another chart, 200 for something else. No, they all give you different kind of indications. Have a fixed style. Okay, I'm someone who looks at 100 candles in the chart and takes my trades based on that. Always follow that. So the second important point is have a consistent style of charting drawing which you are going to use over and over again. And the third and the most important point, this is actually the gospel of this topic, it is use price action and candle formation. Now what is price action? Price action in simple terms is looking at the buying and selling activity in the market. What we are trying to see is that who's buying, who's selling, what quantity has been bought, is someone hitting the bids, someone hitting the offers, what is the size of standing volumes in the market. All these data add up and give you a decent understanding of what is the ongoing price momentum in the market or price action in the market. And the next part, look at the candlestick formation. The candlestick formation actually tells you a lot about the sentiment in the market. If you see a bullish engulfing candle, you can understand that the bulls are having more say. If you see a bearish engulfing candle, you can see the bears are having more say. If you look at the doji candle, a doji candle at the top of the candle means that the bears tried to push the market down, but they couldn't do and they couldn't sustain any momentum. And eventually the market closed up and there's a bullish momentum. Similarly, if the doji candle formation is the bottom of a candle, you can say that the bears are having a higher say in the market and bulls tried to push it up but couldn't do that. And if the doji is at the center of the candle, you can understand there's an indecisiveness in the market. The bulls tried to take control of the market, the bears tried to take control of the market, but neither of them could actually do it effectively, and the market closed at the doji formation. So the type of candle formation, the candle pattern, if you're seeing the higher low pattern, lower high pattern, we can understand whether there's a bullish momentum or bearish momentum in the market and take your trades based on that. Now before moving on, if you're looking to open a Demat account, we recommend you try the platform of Alice Blue. It is a cutting edge technology platform with absolutely no lag in the orders, and the website is very easy to navigate. Now if you go to the website, you get to see all the features which they provide, like a trade store, best margins which they have. They have a mobile web application called the Ant Technology, Trade School, Ant Plus. They have different trading tools like margin calculator, option calculator, daily pivot point calculators, brokerage calculators. All the important ingredients which are required for trading purpose are available there. And if you go to the pricing, you get to see the pricing for different kind of derivative instrument and the cash instrument. The brokerage which they charge right now is For equity intraday, they are charging rupees 15 per order or 0.1%, whichever is lower amongst the two. Delivery is absolutely cost free. This is actually very important. If you're taking your stocks for delivery purpose, it's absolutely costless. Futures and options are again charged at 15 rupees per order. In the MCX, that is the commodity segment, they're charging 15 rupees per order for futures and 15 rupees per order for options trading. Similarly, for currency futures and currency options, they're charging 15 rupees per order, both for futures and options. Another important benefit which they have come up for the users is the Alice Blue referral. If you refer your friends, you get 500 rupees as an incentive plus 10% brokerage cashback for 30 days. Plus 10% lifetime commission, basically as and when your friend does any transactions. You get 10% off their brokerage as a benefit for yourself, and you have 10% brokerage cashback for next 30 days. So this is actually a very important feature which is provided to its users. And importantly, their Demat account is free to open. There is no charge which they charge for any of their users to open a Demat account, which makes it very interactive and reliable for their users to use. And so please open an account at Alice Blue and make benefit of the technology which they provided. They are one of the leading stockbrokers in the country, and with the growing number of stockbroking account, they are bound to be one of the top players in the country in times to come. So 3 important points which we talked about today are: first is choose the charting time depending on the kind of trades which you are looking to trade. The second was have a consistent form of charting pattern. If you're using 100 candles, 150 candles, stick to it and don't keep changing all the time. And the third and the most important, look at the price action and the candlestick formation. Now the next important point which I'll be talking about is understanding what are the various kind of trends in the market. So there are generally 3 kind of trends. The first is the bullish momentum, the second is the bearish momentum, and the third is the sideways zone. So what is the bullish momentum? The bullish momentum is that momentum in which the bulls are defining how the market should be trading and what should the price action. The bears do have the little bit of say, but eventually the major control is in the hand of the bulls, and they're dictating the terms in the market and what should be likely movement in the market. The second kind of trend in the market is the bearish momentum. What is bearish momentum? Bearish momentum is that momentum when there's a weakness in the market. The prices are consistently making new lows in the market and the bears are having a say in the market. Whenever the market opens on every day, you see selling activity more than the buying activity, and it ends up forming more and more lows for the market. And the third and the most important, and this is the phase which is seen more often than not in the market, is called the sideways zone. Now, what is a sideways zone? Sideways zone is that zone in which the market is stuck in a range. It could be a tight range, it could be a broader range, but we don't see any clear trend in the market. If supposedly the market is stuck between 80 and 100, it is consistently trading between that. We don't see any breakout in it for a long period of time. And this kind of market is actually used by scalpers and short-term traders a lot. They actually feed on this kind of market and build their capital accordingly with it. There are basically 3 kind of trends in the market: a bull trend, a bear trend, or a sideways zone. So I hope this short and simple video was informative and gave a decent understanding on how does one identify trend and what kind of different trends exist in the market. I thank you for your patient hearing, and if you have any more doubts, please put all your doubts in the comment section. I'll be more than glad to answer it. I thank you for your patient hearing. I'll see you in future videos of financial education. Thank you so much.